Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you had a very nice weekend so far, and happy start to the holiday season to each and every one of you too. Now, keep in mind, all of these options plays, guys, are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. It is a very easy strategy to run, whether you're a beginner, intermediate, or even advanced investor. Provides some great income and some great ROI on a weekly basis. This is the same strategy that I've used publicly on the channel to generate over 70% year-to-date returns in this year so far, and back in 2023 publicly on the channel as well, over 75% in 2023. So in today's video, guys, we're going to take a look at a few things. Number one, we're going to be going over the expectation for the week. Where can we possibly go in terms of the SPY and the QQQs, and will the volatility possibly continue? Number two, we're going to be taking a look at some of the strategy rules that I like to look for when I'm shopping for some short put options. And then lastly, of course, go over the top 5 options plays of the week. And as per usual, guys, I have a ton of bonus plays for you too. So that is pretty much going to be it, guys. Let's jump right into the action, shall we? So in terms of the expectations for the week, guys, we know that last week was an extremely volatile week. The SPY now embarking on a daily downtrend and into weekly consolidation mode as well. Keep in mind, this week of trading is a short week of trading because of the Christmas holiday. Tuesday will only be a half-day session. The market's closing at 1 Eastern, and on a Wednesday session on the day of Christmas, of course, everything is closed. So when we are looking to sell premium, this is what's referred to as 2 free days of time decay. The premium received for the options will be for the entire week, but since we have almost 2 days off, it's a great way, especially if we can snipe these on the Monday morning, a great way to get some free money in our pockets while the markets is closed. So keep that in mind, guys. Not too much in the words of macro news events this week because of the Christmas holiday, and also no company earnings to speak of as well. So it is only going to be pure price action in the markets. And as we know, we are in a daily downtrend right now, but we do have a very nice base of support down here on the SPY, 586 down to about 577. And on the Qs as well, a base of support below us, 515 down to 510. So keeping in mind that it's a short trading week and that volume this week may be muted, if we have some declines into the support, I'm fairly confident in saying that we will find some bulls playing defense down here. So the trick this week is going to be Monday or Tuesday morning. If we get some red days in the market, that is going to be a perfect opportunity to go shopping for some short puts. Keeping in mind, we have lost a little bit of the weekly uptrend right here, but coming into big support for the bulls on the SPY, big support as well on the Qs for the bulls right there too. So this could be a very interesting week, guys, if we do get that muted volume a little bit and have a little bit more of pullback here coming into possibly, 4 hour slightly oversold conditions, 1 hour oversold conditions. If you see those on the SPY and the QQQ, those short-term oversold conditions, it could be a very good time to go shopping for some of these options. I'm not expecting some crazy moves for this week. It could be a very nice week to just write some put options on our favorite companies and get some very nice premium in our pockets. So that is the expectation for the week, guys. In terms of the volatility should remain a little bit elevated. The VIX is still around 20, and I don't expect this to really fall off a cliff. We can stay relatively range bound between roughly 16 and roughly 22, keeping the volatility a little bit high. So the moves in the market are going to be still quite volatile, which is why if we get some big moves to the downside early on in the week, that is when we want to capitalize on all of these plays. So that is the expectation for the week, guys. Let us jump right into the rest of the action. And we're going to start it off here, guys, with the strategy rules. So what do I look for when I'm looking to sell puts, or what is selling puts as a whole? So the easiest way to understand what selling a put to open is, it is a very easy way to collect some premium on a stock that we want to buy anyways. It is essentially a buy limit order that pays you. Let me explain. So let's say I wanted to buy NVIDIA stock down here at the 130 level amidst all of this gorgeous area of support. There's 2 ways that I can do that. I can either set a buy limit order for 100 shares here, but if it does not get hit and the market just runs away, I don't get the shares, I don't get paid anything. That is where selling put options comes into play. If I want to buy NVIDIA at 130, I can sell the 130 put for the Friday expiry, and I will collect $112 just for placing that order. If NVIDIA ends the week above 130, I just keep that $112, put it in my pocket, and the trade pretty much ends there. However, if NVIDIA drops below, I will have to buy the shares at 130, but I do collect that $112, which will reduce my average cost by $1.12 per share. So it's a great way to get into a company that you're looking to buy anyways. And even if you do not get into the company, you still get paid some very juicy premium. So that is the concept of selling puts here, guys. Now, if you haven't seen my 30-minute video on all of these strategy rules in detail, I will leave it down below in the video description. I'm going to pretty much fly through these rules today. So if you want a more in-depth explanation as to how I go shopping for these types of contracts, which stocks I like to run it on, and everything in between, well, just click the link down below in the video description and you'll go to my 30-minute tutorial on the YouTube channel completely free. It's in one of my watch lists. So moving on, in terms of the rules of the put wheel. Now, number one, what we want to do, guys, is we want to build a watch list of your favorite companies, your high conviction, high quality companies. And then the first thing we want to do on a Monday or Tuesday is we want to filter by red. I am only interested in companies that are red, and I'll explain why when we go through these points right here. That is the first step. We want to filter these by red to see what are the best opportunities that we can go shopping for. Now, rule number one, guys, has to be a solid company only. Never write any puts on a company you do not want to own at a strike price that you do not want to own the company at. It sounds very, very easy, guys, but this is where a lot of people get this strategy wrong. You have to not mind being assigned the stock at the relevant strike price. I'm pretty sure a lot of you, if you get assigned some shares of Microsoft in this level right here, you won't mind too much because you know what you're holding. It's a very high quality company, right? However, if you start to play some, let's say Etsy, and Etsy not being as high of a quality as company of Microsoft, and you get assigned here and it starts dropping and dropping and dropping, and it's low conviction for you, you're going to have a problem constantly opening your account every single day, seeing the position red, and you're going to wonder what you were even doing in the position in the first place. So rule number one for a reason, guys, solid companies only. Number two, we want to be looking at companies in monthly uptrends or long-term ranges. This is to kind of give us the best chances of, even if we do get assigned the stock, we have some very large bull support areas and they can support us for a little bit of a bounce. So these two very important rules as well. Now, number three, the company needs not to have any earnings at all this week. You guys know it better than me. Earnings are a very volatile event. Companies can have very good earnings and still go down 5, 10, 15%. So if you want to avoid all the volatility and avoid ending up with any nasty surprises or oversized losses, do not play any short puts on companies that have earnings this week, guys. In my experience, it can be sometimes profitable, but other times you can end up with very large losses. And if you do not know how to manage them and close the losses quickly, they can unravel very, very rapidly. Now, number four, we want to be looking for stocks in an area of support or a breakout retest. Once again, this is to give us the best chances of not being assigned. If we are always writing puts in a big area of support, like this one down there on Autodesk, well, we run the risk of possibly not being assigned. Or if we do get assigned, like on this one on ON Semiconductor, right? If we come down here, we know that the bulls have a very large area of support and they will be backing us up. So that's what we want to do, guys, is we always want to be writing puts in a large support area or an area of breakout retest. What is a breakout retest? Quite simply, well, it's very, very easy. A resistance range up here, support range down there. Eventually, we do break it to the upside, retest this range of resistance now as support, and then run. This is known as the retest trade, also known as the trend continuation trade pattern. And this is a very high probability entry setup. So all of the trades that you'll see me do are always one of these two criteria, a support area or a large area for the breakout retest. Now, number five, we want to be writing at or lower than the expected move. If you guys don't know what the expected move of a stock is in a given week, it is basically the probabilities that Wall Street attributes how much a stock can go up or how much it can go down on a given week. Here you can see I have SoFi on the screen, and you can see right above me there to my right, or to my left rather, from your guys' perspective, you can see that SoFi has about a 5.15% move up or down. So the trick is we want to be writing puts under the expected move, guys, because if it comes down below the expected move, usually you can see a little bit of mean reversion and a little bit of bounce, which brings us back within the confines of the expected move. So if we are always making sure to write below the expected move, once again, it improves our probabilities of not being assigned. If you want to go to this website right here, guys, it's free. If you don't know what the expected move is, go to barchart.com. Just type it into Google. Type in bar chart NVIDIA expected move, and you'll come exactly to this page right here. It's free. free. You don't need an account or nothing like that. Now, number 6 rather, we want to be writing on a red or flat day. Well, it stands to argue, guys, if we're always trying to write below the expected move, well, we need it to be a red day to free up the strikes below the expected move, right? If a stock opens green 4, 5, 6%, we're not going to be able to write down here, and we do not want to chase the market to the upside, which is why we're always writing on a red or flat day for stocks. You will very rarely ever see me write any short puts on stocks that are green on a given day. It's just not worth it to chase them, guys. Now, before last, we want to be writing puts between 0.5 and 0.75% in weekly premium. This is your ROI. This is how much money you put in your pocket. What do I mean by 0.5%? Well, very simply, guys, if you go on this options chain right here, let's say for NVIDIA, this is how much you want to earn. Now, a lot of people like to use deltas, 20 delta, 30 delta, etc. But the problem with deltas, guys, is that they don't encompass a stock's volatility. So this rule that I'm giving you right now, it really, depending on the options chain, depending on the implied volatility, the 0.5% rule will be distant enough from the current price, depending on the different chains that you're looking at. What do I mean by 0.5%, guys? Very, very simple. We're looking for the 0.5% rule where we have 0.5% of the premium here in relation to the strike price. Let me show you guys what I mean. Take a look at the 127 strike right here. They're paying 68 cents. As you can see right here, 0.68 divided by 127, that is 0.5%, slightly over. So if you want to be able to go through a ton of options chains really, really quickly in your head and not have to constantly look at delta and stuff like that, a very easy way to do it is just look for half of the strike price in cent increments. So let's say half of 130 needs to be roughly 65 cents for it to be worth it for us, right? 0.5% essentially. And you can see this one right there does respect the criteria. We do not want to go too close to the current share price, guys. You'll get a lot of premium here, but the risk of assignment is quite large. We also don't want to go too far away because then we're just not getting compensation enough for our capital for that given week. So I will always be looking for between 0.5% and 0.75. I'm not going to go above 0.75 because the risk of assignment gets too large. If we're always writing within this range every single week on our capital, we're going to be making roughly 26 to 30% annualized per week, or per year rather. And that is without any compounding whatsoever. And that is without being assigned and writing covered calls which boosts ROI even more. This is the baseline, guys. So this is after 6-7 years of running this strategy. This is really the sweet spot that I've derived. It's a very good balance between low risk of assignment and also a very healthy paycheck every week. Now, I write weekly options, but you can use this if you're looking to write options 3 weeks out, 4 weeks out, 5 weeks out. Just look for 0.5% per week. So if I'm looking for a 4-week short put, well, we want to get 0.5% per week. So you should be looking for 2% total in terms of your premium. Hopefully that makes sense. And then lastly, we want to set a take profit at 90% of the contract value. This just makes sure that we're being capital efficient, guys, right? If we write these on a Monday or Tuesday, and by Tuesday afternoon or Wednesday morning, they are 90% profitable, well, why would you hold the contract all the way through Friday? It doesn't make any sense. You would rather just take the money and go shopping for a brand new opportunity that provides you the full amount of the premium. This is just being capital efficient and allocating the capital properly. Then lastly, in the event we are assigned on any of these shares, after which we've written short puts, well, the rules are very simple. If we get assigned, we want to be writing covered calls, same rules, between 0.5% and 1% in weekly premium, and we want to be writing at the assigned strike price or 1 strike higher. The only time you guys will ever see me, if I get assigned a stock on a Friday, the only time you'll ever see me writing 1 strike price higher is in the event the stock has a gap up, right, in the very following week. So let's say I write some NVIDIA puts at 130 and I get assigned, the stock closes at 129, and then on the Monday session, NVIDIA has some crazy news and they go up 5-6% and they open right here at 140, then I might choose to write a couple strikes higher to benefit more from that share appreciation. But that is the only time. I would say that 98% of the time, I'm always writing at the assigned strike prices. So hopefully all of those rules make sense. If you guys want more, of course, click the link down below in the description and you'll get that 30-minute video. Now, moving on further, guys. So, stock number one, let's get into the top 5 options play, shall we? So, stock number one has been one that's been on the channel now for a couple weeks running, and with good reason. It is Uber, and they are extremely cheap right now. At $60, we're talking about a 1.02 peg. That is extremely cheap for a company that's growing its fundamentals extremely well. Take a look at this EPS ramp, very healthy EPS from negative to positive, and the revenue ramp as well is gorgeous. All the analyst price targets are significantly above the stock. The stock is now profitable, and they're generating a ton of free cash flow. Record profits was the indication as of last quarter as well, right? So that being said, Uber has gotten hit with a few negative headlines in terms of the Waymo expansion into Miami. Even though Uber is a partner of Google, the news, Wall Street ran away with this one to the downside. Perfect for us, guys. It is now a buying opportunity at a very cheap valuation for a very strong company. That being said as well, we are coming into our area of support, 61 all the way down to roughly 55, which is the previous zone of all-time high resistance, which is now going to be acting as support for the stock. Couple that with the fact that we are also daily oversold, and you have a recipe for a very high quality company at a very nice discount. That being said, the expected move for the week is 58.88. So let's go shopping together and see, can we find any short puts below that strike price? Let's go shopping right there. We want to be looking for Uber puts, short puts below this level right there. Keep in mind, guys, if you skipped over the short put strategy guide, right, that I just went through, these are for selling puts to open. It is not for long puts. I'm not looking to play the company to the downside. I'm looking to use short puts, selling puts, aka writing puts, to get into the stock if it closes below. I'm not looking to play the downside, so keep that in mind. So that being said, guys, let's move into the Uber technology options chain right here, and you will see that below the expected move of 58.88, well, we have the $58 strike. There's just one little problem with it. It is not quite paying the required premium. You would need to see half of this strike price in cent increments, which should be about 29. Now, I know I'm being a little bit picky here. 26 would be fine. 27 would be fine as well. So at a first glance, 58, not too bad right now. However, if Uber chooses to decline on the Monday session again and comes down into the 59 range, that will definitely free up either the 58 or the $57 strikes. And if Uber for some reason has a minus 3 to 4% day and comes all the way down here to 58, 57, you may be even able to get even cheaper. Think the 57, 56, 55. So at a first glance, we have to be dynamic with these strikes depending on the size of the move down on a Monday or Tuesday session. That being said, the ones that interest me the most are 58 all the way down to 55. Just make sure the one you are looking at provides the required premium, which should be about 26, 28 cents as a whole. But anywhere in the support range, 58 all the way down to 55 is a very juicy area for me. That is stock number one. Stock number two is going to be a combination of many different semiconductor plays because there is a lot of them that are looking quite good right now. The first one is Nvidia. So when I like to play semiconductors, guys, because the sector has been slightly out of favor recently, you can see that through SMH, right? The entire sector has largely just been flat for the last 3 months. So this is when I only play or largely play the biggest sector winners. And one of those is Nvidia. So the expected move for the week is 129.92 right here. Coincidentally, that is also the very next area of support, and we are also in a very nice monthly long-term uptrend, looking for the monthly higher lows for possible further appreciation into 2025. So I want to benefit from these Nvidia prices while they are still low. That being said, this area of support is 130 to 125. Expected move is 129.92. Let us see if we can find any put premium under 129.92. So let's go shopping together for some Nvidia, shall we? Give me a very brief moment. All right, so taking a look at Nvidia right now, Nvidia not looking too bad. Under the 129, you'll see it is providing at least 0.5%, right? You would need to see about 65 cents right here. So the 129s look very good, and they are under the expected move. But if we want to be conservative, knowing that there's been a lot of volatility in the markets lately, right? You may want to just drop a few more strikes because we can get 0.5% all the way down to the 127s. Now, it stands to argue as well that if Nvidia has a red day on a Monday or Tuesday, bringing us down back into the 133, 132, 131 range, that will free up even lower strikes. Think the 125, 124, 123. So at first glance for me, guys, depending on the size of the move down, Monday or Tuesday, I will be interested in the following strikes. 128 all the way down to 122. You want to be dynamic. You want to be going as low as possible on this options chain while still getting the 0.5% rule. That is the trick of the trade, guys. So watch how Nvidia moves. I'm not opposed to writing here at 129 if the stock is flat on a Monday, but if the stock declines, I'm not going to still write the 129s. I will be going lower, as close as possible to 125. As a matter of fact, I already do have some Nvidia shares myself that we got assigned a few weeks ago at 137, and I will be looking to average into the position more under that 125 range. So keep those levels in mind, guys, for Nvidia. In my opinion, these ones look fairly decent. 128 down to 122, as low as you can go while still getting our 0.5% rule, depending on the decline that Nvidia may have on the Monday session. Now, if Nvidia just runs on the Monday session, guys, are we going to still trade it? No, we want it to come down. If it goes up, very simple. What do? You just look for another trade. And here's another few trades in semiconductors, guys. So AMD, this one has been marred with a lot of controversy recently in terms of, are they going to be able to ramp the data center facilities fast enough? Are their products going to be good enough to compete with Blackwell? And because of that, the stock has been in a perpetual weekly downtrend right now, approaching the final destination of support, 115 down to about 105. That being said, the stock is trading really, really cheap right now. The expected move for the week is 115.22. I'm not going to be showing you guys all of the options chains or whatnot, but if I can find some premium down here in the low 1-teens, 112, 111, 110 off a further decline on AMD, that could be a decent area to go shopping for AMD if it's a company that you like. No pressure, guys. I'm just giving you ideas, but we are daily oversold right now on the RSI, and a little bit more could free up some very juicy strikes down there in the lower 110 area. Another semiconductor trade that I've traded a lot on the channel recently is on Semi. ON is the ticker, right? So this one, large area of support, guys. As a whole, you can see how wide this range of support is. The expected move for the week is 63.99. And if we can find some premium in the low $60 range, I think it's a very juicy opportunity for a very solid quality company. So that would be the range that I would be looking for on Semi. And then lastly, as well, we had Micron. Micron, after their earnings, also coming down into a big range of support. The 200 weekly EMA is down here at about 81. We have prior all-time high resistance, which is now acting as support for the bulls and has been since the month of February, essentially. So I like these lower ranges on Micron. If Micron comes down Monday or Tuesday and frees up those lower $80 strikes, I think there's a decent opportunity there as well. So I just gave you 4 different semiconductor names for you guys to get some trade ideas from and or be inspired from. So hopefully that was insightful. Now, trade number 3 is going to be Elf Beauty, one of my favorite beauty companies in the entire market right now. Beauty is more resilient than you may think in the face of recessionary concerns, right? People will not stop doing their makeup just because there's a recession. If anything, they will pivot from expensive products to cheaper products that have the same quality. That is where Elf Beauty comes in. Their online business model and their viral marketing campaigns has attracted a lot of very young consumers who are really attracted to the price points that this company gives. This company gives somewhat of a luxurious product line while still keeping the costs very, very low for the end consumer. They do not have any physical stores, so the cost to run this business is a lot lower, and their marketing strategy using entirely social media has proven to be very good. They've attracted a very loyal customer base and should be doing very well over the foreseeable future. That being said, we're in a very nice weekly uptrend right now, looking for a weekly higher low. This is what I mean. This is the breakout, retest of a prior range of support, and possibly due for a little bit of a run. That being said, Elf Beauty right now sitting above a few areas of support, and the first one down here is 120 down to 115. The expected move for the week is 122.36. So let's see if we can go shopping for some Elf Beauty short puts on the options chain, shall we? So moving into Elf, we can see down here with an expected move of 122.36, we want to be below the expected move. So keeping that in mind, you can see 122, whoa, they're paying almost 1%, guys, $1.10, very, very juicy, but we know that we want to go a little bit lower just to decrease the risk of being assigned. Take a look at these right here. The 120s are paying 86 cents. That is very good. And even the 119s, I know it says 52 right here, but look at the bid and the ask. The 119s are even paying 60 to 75 cents, which is 0.5%. If you guys don't know how I'm doing that in my head, guys, as I said, it is half of the strike price in cent increments. Half of 120 is 60. So you know you need to see at least 60 cents on the bid right here. So it does respect those criterias. So 120, 119 at a first glance, very healthy. However, if Elf Beauty has a decline on the Monday or Tuesday session and brings us down into the 126, 125, 124, 123, because you know Elf Beauty can move a lot. They can have a minus 3, 4, 5% day, right? If they come down into the low 120s, this will free up even better strikes. Think in the mid 1-teens, 117, 116, 115. So at a first glance, I would be keen on choosing the following strikes. 119 all the way down to 114, which is really deep into this support area. And that's where I think the bulls will play a decent amount of support. It was resistance for a while, and now it has been acting as support as well. So 119 down to about 115 is the area that I will be looking to play Elf Beauty over the course of this week. Now, that is it for stock number 3. Stock number 4, well, this is going to be a combination of some value plays because we know that the value plays have been crushed recently, right? This is the value index having one of its worst streaks ever since it was conceived, essentially. Huge downswing on value, huge swing on the Dow Jones as well, and even a dividend ETF, a very solid one like SCHD, has been coming down in a tremendous fashion. Suffice to say that some of the value stocks are pretty oversold right now, and one of them is UPS. UPS is a very solid company. FedEx just had earnings last week, and FedEx had very good earnings. And UPS should be also having some pretty decent earnings end of January. That being said, I like this one because even though we're in a big monthly downtrend for the last 2 years, we are now rounding the corner of the cyclicality of the business. What do I mean by this, guys? Well, UPS is a stock where when the economy is booming, it does really well. And then when consumers pull back on spending, you can see what happens, right? The EPS goes down, the revenue goes down, but now we are rounding the corner. Look at the expectation for 25, 26, 27. That is EPS, and this is revenue as well. So rounding the corner, most analyst price targets are above the current stock as well. And in the process, guys, they are paying a 5.19% dividend. And take a look here, guys. This is the monthly time frame. Look at this MACD all the way down there. It is wanting and willing to cross very shortly. Also, we have previous resistance, which is now support, and we have the 200 monthly moving average sitting right there. So this is a very fantastic level for a otherwise very good company, just that has been hit a little bit hard by consumer discretionary spending coming down and people paying less for priority shipping as a whole, right? That being said, the expected move for UPS is 123.54. Let us see if we can find anything on UPS below that level. And you'll see one thing, guys. UPS doesn't have a lot of volatility. The IV is relatively low on the stock. So to write put options, you really have to be kind of on top of the stock price. That being said, I do like the lower 120 levels. Let's have a look, shall we? So we can see here that even the 123s, guys, they're not paying enough. Half of 123 is roughly 61, right? So that being said, we would need to see at least 61 cents here. We do not have it. Only at the 124s do we actually have it. And as you see, 124 is above the expected move. So one clear thing needs to happen for UPS to open up this trade next week. We need to have a decline Monday or Tuesday. If we do get a decline into the low 123s, even high 122s, that is going to free up the strikes 122 and maybe even the 121s. At a first glance, the ones that I prefer are these ones right there. The 122s or even the 121s on a decline, that would be a very attractive trade, and that is for UPS. Value stock number 2 that I've been talking for about a while on the channel is Coca-Cola. Coca-Cola is putting in the monthly breakout, retest, and run. Now, Coca-Cola needs no introduction, extremely solid company, some of the best fundamentals in the entire market right now. It's just it has been out of favor now for roughly the past 3 months of trading. That being said, Coca-Cola is trying to find a local bottom area and has been establishing support from the midpoint in November. You guys can see this entire region right here is one big massive support, prior resistance, newfound support for the bulls. It's a large monthly level. So this all the way from the expected move this week of 61.72 down to $60, it is all a big support range, and the 200-day EMA, or weekly EMA rather, is sitting down there at $60. So the expected move for the week is 61.72. Let us go shopping together and see, can we find anything below the expected move of 61.72? As you guys can see, Coca-Cola is below 61, so we're going to be looking at the 61s, but same problem as UPS. And this is a problem that a lot of value stocks have. They do not have a lot of volatility, meaning you almost have to be on top of the share price to get any premium. Even look at the 62s, right? We're barely 1% away from 62, guys. And you can see even the 62s are not giving enough premium. You would need to see about 31 cents for this trade to make sense. And now we just do not have it. So what we need to see from Coca-Cola on the Monday or Tuesday, if we want to open up these strikes below, is you need to find another dip on Coca-Cola down below into the low 62s, even the high 61s. That will free up the $61 strike. We want to be getting as close as possible to down here, $60. So if we see Coca-Cola embark on a little bit of a sell-off early week, and we can find the 61 or even the $60 strikes, those are the ones that I'll be looking for. 61 or 60 was still one of my favorite value plays in the entire market, guys, and does not require a lot of capital to play. It's only about $6,000 for 100 shares, right? So those are plays number 4 for the value trade, and play number 5 is going to be a pair of fintech companies. So number 1 is going to be Square. I love Square as a company, guys. The valuation right now at $90 is extremely, extremely cheap. Look at this forward peg ratio. It is only a 0.73. Anything under 1 for a peg is dirt cheap. Between 1 and 2 is okay. Over 2 is expensive. This is one of the cheapest fintech plays in the entire market right now. Look at the price to sales for a tech company. Usually you see price to sales 10, 15 for tech companies. It's trading at a 2.28 price to sales, meaning the market cap is only 2.28 times higher than the yearly revenue that the company brings in. These are fantastic valuations, guys, and it's a 3-in-1 solution. It has a solution like PayPal with the Cash App platform. It has a solution like Affirm, a buy now, pay later solution, and it has solutions like SoFi where it provides banking, trading, and loans, let alone the actual Square merchant platform for checkout, right? You guys must have been to restaurants or whatnot that use the little white square where you just tap your card. That is Square. So they have so many businesses in this company, and they're extremely cheap right now. Now, that being said, this is another one of my favorite trade setups. This is known as the breakout retest. Weekly uptrend, breakout. Where do they break out of? Of a 2-year range of resistance, guys. That's a big one. Now they've broken out of it. We're looking to retest this prior resistance now as support, form a base of support, and go on for another leg higher. So that being said, one of my favorite trade setups, and it's looking quite good. The expected move for the week is 86.3. Let's go shopping on Square and see if we can find anything below that move right there. Below 86 for some short puts, shall we? So let's pull up Square. And let's go shopping together. So below the expected move of 86.30, we want to be looking for 86 or better, as deep as possible into this support range, which is 86 all the way down roughly to $80, right? As deep as possible. So if we're looking for the options chain, as a matter of fact, you will see that at 86, they're providing 70 cents. That is a lot of premium. You can all go all the way down to the 84 strike, and you're still getting 0.5%. So this is where I would like to find my sweet spot here in the lower $80 range, as deep as possible in this support zone. So at a first glance, if Square opens up roughly the same, you should be able to find some good premium around the 85s and 84s. However, if Square has a decline on the Monday or Tuesday, bringing us down into the expected move, that, guys, may even free up the lower strikes, 84, 83, 82, 81. You want to be going as low as possible, as deep as possible into this support range to give yourself the best chance of not being assigned. So at a first glance for me, guys, it's going to be the 85s all the way down to roughly the 81s, as low as we can possibly go on that options chain while still getting paid our 0.5%. Now, stock number 2 as part of the fintech trade is going to be another one, SoFi. Now, this one, guys, I will be front and center. This one is pure momentum. It does break some of my rules, right? We are not really close to a big support level, and we are also not retesting like a breakout retest zone that much. That would be kind of down here in the low $13 to $12 range. However, a lot of people like SoFi. They've been asking me for SoFi. It is a good momentum trade. There's a lot of positive attention around the stock. So this could be one that if we want a cheap play and we want to take on additional risk and go for the momentum follow through as they try to find somewhat of a base of support, right? This whole level 16 down to roughly 14. This is what the bulls are trying to find a baseline of support in, and then maybe go for another leg higher. So that being said, the expected move on SoFi for the week is 14.56. And I am already in this one as of last week, guys, right? So I'm in this one too, momentum trade, even though it does break a few of my key rules that I look for. We got the 15 puts last week for 49 cents for the upcoming Friday. So that being said, the expected move this week is 14.56. If you want to stay a little bit conservative, let's go see what we can get on that SoFi options chain, shall we? So let's pull up SoFi real quick. So here is SoFi. And taking a look, guys, well, you can see that even at the 1450 or the 14s, you get 0.5%. At 14.5, you get more than 1%, which is good, a little bit aggressive. I even went aggressive last week, guys. I'm here at the 15s and I got 50 cents. If I'm looking to play momentum, sometimes I like to play it aggressively, but you can see, guys, you guys know the size of my account. I could have done way more than one contract, but me, I'm going very small because if I get assigned here, I'm leaving some buying power to DCA in the event we go for further extended weekly pullbacks, right? So that being said, we have to be conscious of that. So keep in mind 14.5s for 1%, not bad, but it is aggressive. The 14s are the most defensive play of them all. They provide 8 cents, which is above our 0.5% rule, and that could be the more conservative way of playing SoFi. But I figured I should give you guys this one because it is another fintech play that's been doing very well and has some good momentum to it. So that is it for the top 5 options plays, guys. Now, let's get into some of the bonus plays. Now, before we get into the bonus plays, guys, are good. It's just they don't make the top 5 options list cut because they're either too aggressive or they're just a little bit, they're not ready yet. They're a little bit too early, right? That being said, there's a ton of opportunities in the market right now. And the first ones that we'll be looking at, right, are some in the big tech list because we know that we're looking for some of these big tech trades to come back, right? One of them is Amazon. It is not quite ready yet, but put this one on your watch list. Gorgeous weekly uptrend. As we can see, if we pull back, this is a breakout, retest, and run. If we pull back, get close to the 214, 210, I will be looking to write some puts on Amazon in this level right there. Google, same concept. Weekly uptrend, looking good, excuse me. Breakout, if we retest the lower range of the low 180s, I will be shopping there for some short puts. That is if we see some more declines over the next 1 to 2 weeks. So put this one on a watch list if it does come down there. Like I said, these are bonus plays. They're not quite ready, but they're very solid plays if they do come around. Microsoft, I took this one last week. You can see Microsoft, I wrote the 430s. Now this one is expensive, guys. We wrote the 430s for $2.05 for the upcoming Friday. It is expensive, but the setup is gorgeous. If you have a larger account, this is one that is a very extremely nice setup too. It is a classic breakout of a big range of resistance, as you can see, testing it as support and possibly looking to run up another leg higher. That being said, I love this range, guys. 435 down about 425, decent little area to make a trade attempt on Microsoft for some continuation, right? And the same thing goes for Tesla. Tesla doing the exact same thing. Breakout. Where do we break out from, guys? We broke out from the prior all-time highs. You can see this weekly candle close. Not quite ready yet, but if we do come down into this range, if you have a larger account, guys, down here 410 and about 375, pull back here for the retest, it could open some short puts in the 370 down to roughly 350 range. You can play this one aggressive or conservative. To come down here, I'll be playing it a bit more conservative, going for roughly the 360 as close as possible as I can get to this prior consolidation range down there. Those are for the big tech names. Then there's a host of banks as well. Look at all these breakout retests on the banks, right? Beautiful weekly uptrend. Now we're retesting on Bank of America, retesting this region right here. $42, $41, not a bad location. We playing some of these financials companies. Wells Fargo, a little bit too extended, but if we do retest down here, 62, 61, I know we're far away from it, guys. I'm just giving you some ideas and some setups, right? Charles Schwab, same thing. We blasted off from here. If we retest and come back to this range of support, roughly 72 down to 68, could be a decent range to start playing some of the financials, right? Just use XLF as a guide. Nice weekly uptrend on XLF, which is the financials ETF, pulling back into support, looking for another leg higher. So if the banks are something you guys like playing, just keep an eye, but be patient. Be patient with the trade setups. The banks, in my opinion, are not quite ready just yet. That being said, there's a few other riskier plays such as SMCI. I like playing SMCI, guys, because the premium provided is usually very, very healthy. Take a look how deep you can get on this premium for SMCI, guys, right? The SMCI, look at this. The expected move on SMCI for the week, right? Some of these more volatile names could give you some great levels for entries possibly. Take a look at SMCI. The expected move is 29.31, 7%, right? Keep that number in mind, 29. Let's look for 0.5% on SMCI, right? Let's expand the chain right here. And you can see that you can go all the way down, guys, all the way down to the 26.5, which is well under the expected move, and you still get 0.5%. So SMCI, I like playing it down here in the roughly 28 down to roughly 24 levels. Decent area of upcoming support for the bulls. Even though the stock has been out of favor lately, you can play it in a conservative way and still get a lot of premium with a lot of margin of safety. Now, then we have the Bitcoin trade. So we know that Bitcoin as well has been coming down as of recently. And I know you guys love playing some of these Bitcoin names. Bitcoin, we could be expecting maybe a retest of the perhaps a lower 90 range. It has come down a little bit over the weekend, so maybe when the stock market opens tomorrow, you could get some good plays on the Bitcoin proxy trades. BITX is one of them. If we have more declines on BITX, 2 times leverage version, we can look possibly in the mid $40 range, usually some very good premium down there, and that will be a lot further than Bitcoin in the low 90s, right? So you want to give yourself a large margin of safety. We do not want to play these too close because they are 2 times leverage, and we have to be careful. Anywhere in the mid 40s, not a bad proposition, guys. That would be roughly 20% away before we get assigned. Another one is MSTR. If MSTR drops a lot, well, MSTR drops a lot, we might be able to play down here in the 260, 250 range. We want to stay a little bit conservative for MSTR. I've been playing these ones a lot in the past few weeks. So far, so good, but I'm not playing them very aggressive, super close and getting a ton of premium. I'm looking for 1% or 0.5%, guys, down here. I'm just looking to be a little bit more cautious for Bitcoin as we embark on this pullback. Same concept for Coinbase. You got to be a little bit more conservative. Come down here below the area of support, right? 224 or lower. If you guys want to use the other ones like MSTX or CONL, the levered versions of those, you can, but just be very careful. Once again, go low, guys. No need to get way too greedy on these at all. Another trade idea are some of the China trades. Look at Baba. Baba had some of the best quarterly earnings that I've ever seen for the company this last quarter, but we know China has just been out of favor. That being said, we're coming down into the best area of support the bulls do still have, which is roughly 80 all the way down to roughly 75. Pull back into here, it is almost ready, almost, right? 80 down to 75. I would not mind being assigned some shares of Baba down there. Could be a very interesting trade if you're looking to build a little bit of a position on some of those China names. So those are just a few of the other additional swing trade ideas. There's so many more, guys, but you know, those are just a few of the bonus plays that I figured that I should bring up to you guys because I have a lot of people ask sometimes for a lot of those bonus plays too. So that's everything that I had for you guys in today's video. A ton of bonus plays and the top 5 options plays. I mean, I gave you guys like 10 plays instead of 5, right? I gave you guys different ideas depending on the sectors. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these every Sunday in preparation for the upcoming week. So hope to see you back in the future. And lastly, if you have any questions on the strategy as a whole, please feel free to leave them down below in the comment section and I will get back to you usually within the first 24 hours. And in the event, guys, that you want to trade with me real time, live, and have access to all of these trades, here are all the wheel trades, not only the wheel trades, but we do a ton of other trades, call options, debit spreads, share swing trade, long-term portfolio trades as well. If you want to have access to all these trades, here's the wheel trades from last week, right? We'll go back. This is all the wheel trades since the inception of the Discord. And the green boxes are, the green check marks are wins, right? So all the trades are always very transparent with the wins and the losses, guys. Most of our assignments as well go very well. This NVIDIA assignment we're in right now is working very well. The Uber play as well is looking quite good too. So that being said, guys, if you want access to all these trades in real time, trade with me live, well, the link down below in the description for the Discord. And we have a special coupon code for the Christmas upcoming holiday. 30% discount on your first month, guys. If you want to explore the discount, the code is Santa in all caps. I'll leave it down below in the description too, but 30% promotion on your first month if you want to explore the Discord and have access to all these trades in real times, all the calls, the setups, right? Have access to the private morning live streams, which we do Monday through Friday for about an hour or two every single morning. All the different trade setups, whether it's the wheel trades, you know, the selling options trade, the buying options trades, call options, leaps, all that good stuff. And chat with me all throughout the day and ask me your questions on your stocks and your options. And I'm always very fast to respond in there. So if those are some things that interest you, the link to the Discord is down below in the description. And the coupon code, once again, is in all capital letters, Santa. So thank you guys very much for watching. Always a pleasure. Hope you guys have a very good week of trading. That's it for me. Take care and peace.